Hi everyone, Basil Chapman here. I'm usually the host of the Tiger Technicians Hour, 12 to 1 p.m. Eastern Time, every market day. And I have a newsletter called The Opening Call, daily newsletter, very comprehensive look at the markets with particular buys and sells and whatever, just detailed report. We're looking at the Dow down 39. It was down a lot more from the opening bell because the jobs report came in, started a little nervous reaction right across the board. But in fact, the Dow's come back. It was down at 26,733. It's now 200 points higher at 26,928. And this is important. Let me just show you something here. You see this cup formation here. There's a cup formation. There's a little mini cup formation. This is like a rising cup and handle pattern. This is the classic pattern. Look at the weekly. So on the left here is the daily. Yeah, right here is the weekly, the Dow, in leg, E in the Chapman wave. And here in the monthly chart, we've made all-time high. So that head and shoulders pattern, with people who talk about a triple top, that's far more correct technically than anyone who's saying head and shoulders. I just don't see how you can ever have a head and shoulders when after the high, well, first of all, the high in January of 2018 was 26,616. Pulls back to 23,344, then rallies up to 26,951, a modest high, but it doesn't close that month at a new high. It closes below the 26,616 level. So 26,951 in October of last year, kaboom, it plunges down to the 21,712 area in December, and then starts a fantastic rally, and that rally has gone to 3 peaks. And let me just quickly explain that. So in the Chapman wave methodology, make it real easy. The core patterns that we look for, try to identify the lowest low bar. Doesn't matter what the time frame is, whether it's a 1 minute chart or a multi-decade monthly, it doesn't matter. Identify a low bar and then merely count each successively higher peak, alphabetizing them with uppercase on the way up, lowercase on the way down. They go all the way from A to G, but it's the fourth highest peak, peak A, peak B. Next, at 1 penny higher starts leg C, makes a little a curve round. That becomes a peak. That becomes peak C, pulls back. As soon as it goes 1 penny above that, it starts leg D. At that fourth highest peak, peak D, you'll see how many times that's where you can get a deeper retracement. That's where the yellow light goes on, lift your foot off the accelerator just to see what exactly is going to happen next. And I look at it, and the market is really 3 patterns: straight line up or down, like that, an arch formation or a curve, where you're going from 1 point, rallying, and then coming back to test the support, or rallying, pulling back, and then going back to that left side high to test that resistance, or you can get a combination: straight line, arch, straight line, cup. All right, we've done that. Now let's see how that works in real time. So in real time, what we've done is in the Dow, 26,695, we made a high on the 23rd of April. We were fortunate enough to pick a peak T in the 120-minute chart a day before. So we went short then, and we started to cover as we got to the bottom. We went long on June the 3rd, we went long. We stayed long. We've taken a little, for swing traders, we took a little bit off in the 26,300s. And we've remained long. And today I said, because we are so close to D in this inside track repellent zone, this is where we could also take a little bit more off, but we're keeping a core. Why? Because there should be, in the patterns I've just been discussing, a leg D. If you look at the MACD, the moving average convergence divergence in the daily, very strong. If you look at the slow stochastic in the daily, 87%, over 80% is very good. Over 90% is fabulous. You're at 87%. That's good. In a weekly chart, the MACD is cross positive. Stochastic is running. It's at 83%. That's good, but it's way less than it was at the previous peak of 26,695. So that's the reason why I'm thinking a little caution here, and I'll explain a little bit more as we go into the different indices. I just want to say, to me, everything about this suggests this is a leg C in the monthly chart, an all-time high. This is looking very strong. I do expect that this rotation between red and green and red and green is that we're getting close to some kind of consolidation. Talking about that, just a quick question I had about the E-mini. This is a peak E in the 2-minute chart, a peak F in the 5-minute chart, and there's your peak D. I haven't got a down arrow yet in the 10-minute chart because the MACD has not crossed negative and the stochastic still at 89%. I suspect it's on this pink line, the 200 period moving average. I suspect that if it goes to 29.91, all of them will be in sync for some weakness here, maybe even going into the close, just because I'll explain why as we move along. Let me show you. The S&P, that's already made a leg D, and this is probably a peak D today if it doesn't make a new high today, all-time high. MACD is very good, getting a little tight, but still very strong. And stochastics at 92%, that's very good. And the weekly chart is the same as the Dow. The technicals aren't as strong as they were back at that peak C at the week of the 3rd of May at 29.54. But here we are at 29.88, down 7 points, and still technically very strong. Now, this is going to be so interesting. We've gone from the December low. Every single month in 2019 has seen a higher high from that January takeoff. So this is still a leg A. F/A. F says, oh, my God, be so careful because you could have a tremendous smash to the downside. A says, oh, my, any pullback is going to be worth buying because it's going to be so. Here we are. We're waiting for the month to close. The month has just barely begun, so we can't talk about a closing because we want to see if the MACD crosses positive and the stochastic at 85% remains high. I like what I see. I just think we're in for some short-term duration pullback. You go to the QQQ, NDX 100 trading vehicle. It's made a peak E if there's no new recovery high today at 191.44. And that is an all-time high. That has actually started a leg D in the weekly, but it's also started a leg B in the monthly. Isn't that interesting? So now I can say that I'm pretty sure this is leg B and no other wave count because you can't go higher than a G. So F in October at 187.53, pulls back to 143.46 in December. Huge leg up to leg A to 191.32. And now we just hit 191.44. This is a leg B because you can't get H's. I'll be back. We'll talk more about all the different instruments. Go to bonds, crude oil. We'll talk about the XLF, the financials. I'll be right back. Basil Chapman sitting in for the one and only Tom O'Brien having a break.